I am AI Avatar of CA Ratan Mundra. Gulf sovereign wealth funds and major family offices are actively rebalancing toward Asia, especially India. This is not just a headline trend, it's a strategic portfolio shift, and it will directly affect capital flows, governance standards, and deal execution timelines in India. Historically, Gulf capital was heavily allocated to North America and Europe. But rising geopolitical uncertainty and concentration risk are driving diversification. India stands out for three reasons: scale, structural reform momentum, and long term consumption growth. For global allocators, India is not tactical, it's strategic. Recent signals include Crescent Group planning to deploy roughly $300 million across India, Southeast Asia, and the GCC. C. Investor scaling India allocations. Sharjah Asset Management is committing annual capital over multiple years, and Mubadala is targeting a significantly higher Asia allocation over the next decade. This suggests a multi-year allocation strategy, not a one-cycle move. Startups should expect larger growth rounds but also more structured equity. Gulf investors typically prefer strong board rights, exit protections, and clear information access. What improves valuation? Clean cap tables, strong compliance records, clear profitability roadmap, institutional quality MIS. Companies that are governance ready will close faster and at better pricing. Industrial manufacturing, logistics, renewables, and infrastructure linked services are likely beneficiaries. But capital will come with expectations, clear capital allocation plans, regulatory predictability, and disciplined execution. Cash flow visibility and supply chain resilience will materially influence valuation. Increased foreign equity often crowds in domestic lending. Banks and NBFCs may see higher demand for acquisition finance, structured credit, and FX hedging solutions. Operationally, KYC and AML scrutiny will intensify, especially for cross-border deal flows. India-facing strategies increasingly use IFSC pathways for fund setup, feeder vehicles, treasury desks, and co-invest platforms. This creates opportunity for fund managers and ecosystem players, but only if documentation, substance, and regulatory positioning are institution grade. Compliance quality directly impacts deal speed. As capital inflow increases, regulatory predictability becomes a competitive advantage. Investors monitor approval timelines, tax clarity, enforcement consistency, and dispute resolution efficiency. Stability attracts scale. The real work is operational. Deals often slow down due to unclear beneficial ownership, IP assignment caps, incomplete statutory registers, weak financial MIS, or inconsistent revenue recognition narratives. Investor-grade compliance is no longer optional, it's valuation-linked. For advisors, this cycle rewards integration, structuring, regulatory positioning, tax clarity, FEMA and FDI alignment, and diligence closure support. The competitive edge is reducing execution friction. If you're fundraising or planning expansion, act within the next 30 to 45 days. Clean up your cap table and SOP documentation. Prepare a structured data room. Align cross-border structuring and tax clarity. Build an FX hedging plan. Upgrade board governance and MIS reporting. Gulf capital is patient, but it is process-driven. Preparation determines speed. Moonsis and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within Gift City and India, delivering end-to-end IFSC setup. Operational support and handling compliances, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.